And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, friends and traders. Welcome, Market Recap. It is Thursday, September 2nd, and I am Dan Hodgman. I hope you guys all had a great day. Nice opportunities today in these markets. In particular, look, we're talking about these equity markets. Great areas that we saw them break off of, rotate down to other great levels. So we're going to take a closer look at that here shortly. You got crude oil moving higher today pretty heavily. Runs all the way up to that $70 mark. First time we've seen it this high, going back to August 6th was the last time we saw the market break into that 70 range. I think August 6th was just a little shy of $70. We'd actually have to go back to August 4th to get to the $70 mark. But really good opportunity there. If you were able to catch the opening move, but we're going to pay attention to how to recognize when that rally was over and to watch where do we find that market rotating lower. That's what we're going to take a look at. It rotated really nicely down to this week's weekly kickoff high, 69.80. So we'll take a close look at that one here shortly. Like we said, you got the equity markets. S&Ps opened up this morning and rallied right to yesterday's swing high. Prior day high, prior day low. Those are levels we talk about. Those are levels we want to be marking on our charts. Paying attention to. Markets broke off of that. Tried really hard though. S&Ps tried really hard to get through there. Could not make it. Rotated lower. Almost down to settlement price. Got pretty darn close, but couldn't get all the way down there. And we got a nice little rally here to end of the day. Now, Nasdaq. What I love to see, Nasdaq opened up this morning, went to the tick of yesterday's point of control. From there, broke down and rotated down to earlier this week. We had an unchecked point of control. Market came right down to it. Point of control to point of control. Great opportunities, unchecked to unchecked. So you want to be paying attention to those. If you have an unchecked point of control, make sure you're marking that on your chart and you're paying attention as the market starts working its way towards it. And if you missed the initial sell on the point of control right off the open this morning from yesterday's point of control. If you missed that, we had another opportunity. The market pulled back. Did not get back up to that point of control, but we had a nice chance to get the short and to be able to take advantage of our trend here today. When it happened a couple times, we had a couple nice pops, as you can say, in the downtrend here today to be able to get in on the short there. Remember, when markets are directional like this, if they are looking for rotation, which is what we got today in the Nasdaq, market rotated from high to low. It checked levels up above and it rotated to levels down below. Those are things that we really want to be prepared for. We want to look for those opportunities. It's not so much picking tops and bottoms. I don't like seeing when traders, I don't like talking to traders when a market is moving all day long, is directional, and hearing them say, well, I thought we would get a buy chance here. I thought we'd get a buy chance here. No, our job is to recognize that this thing is rotating inside, staying inside, fading extremes. We want to be able to find those chances to be able to run the market to the next extreme. So good opportunity there. Gold market opened up this morning off a settlement price, broke down and got a little choppy towards the end of the day. Pretty much very consistent what we've been seeing in this market. The first couple hours in the morning presenting big moves, tough moves to trade, but we're seeing big moves in them falling into a little chop. Next, you got the euro. Euro opened up this morning on settlement price and just continued with the trend. Yesterday was an update, continued here today. That market continues to press higher, and the 10-year note pretty much stayed inside. Attempted to rotate down towards settlement price, missed it by a tick, and stayed sideways all day, up and down about a couple of ticks. So really not a ton of opportunity there. Other than that, no major news going on. One thing to note, though, if you're an investor in Ford sales declined 33%. which really no surprise there, right? We do know there are shortages. These chip shortages have been a big thing in all sorts of vehicles. As you guys know, I'm a big snowmobiler, and snowmobiles are really struggling because our manufacturers are struggling because they can't get these chips either. So we're going to maybe see some of these vehicle manufacturing companies start to take some hits. So keep an eye on those. And don't forget, tomorrow is Friday. First Friday of the month. What does that mean? That means unemployment numbers are coming out, non-farm payroll coming out. So be patient tomorrow morning. Do not jump in right at 7:30 just because a number comes out and you think it's good or bad and it's going to lead to some sort of fundamental move. Remember, there's always the emotion first and then we get the reaction later. So please, please, please be cautious of that one tomorrow. All right, let's go ahead and take a look at our charts here and see what we've got going on. So the first thing I want to do is I want to just take a look at our daily on the crude oil. I know usually in the afternoon, I tend not to look at the daily. We want to see what happened throughout the day and where were those opportunities. This market rallied up nicely, and here's what I'm starting to look for. I'm trying to understand what's going to bring this market all the way up as high as it did, up to that 71.60 mark today. And the only thing we have is a prior swing low. This is the only thing catching my eye here. And I'm not really going to look for any trade based off of this because the market has moved through it nicely multiple times. And then you start looking a little bit closer and we start to notice the market has rejected this price back in June. We rejected all the way up here at 76.80. We supported it back in July. It held a little bit in the middle of July as well, and we moved through it nicely last time we were up here. But this is really what's paying attention. We've seen continuous reaction right around this price. So let's go ahead and keep an eye on that level. If market accepts above, if it starts to accept above, that's going to be a good opportunity. I think this could be a very good area for inflection. But I'm not going to look for my trade rate off of it. I'm going to look for it, use it more as some sort of direction or target as this market, either if we accept above it and we start to work higher, or if we accept below it, I'm going to continue to look at this 76 or 70.60 continuously. Now let's go look at the 30-minute chart and see what we got going on. Market opened up this morning. Huge pop, right? What are we doing in that first minute? We're paying attention to where's this directional move trying to go, and it was very quick, told us this market wants to go higher. All right, no hesitation there. Wants to go higher. Let's see if we can get in. If you don't make that initial move, that's all right. Now our next thing is waiting for the next opportunity. If that's catching, waiting for this little bit of a pullback here to get in on the move to the upside. Or if you start to look here, we'll watch volume. Volume continues to come in as this market starts to plateau, and you can see it really struggling to accept buyers up above 70.50. It started to struggle. We start to see volume slip, right? There's a divergence in volume. And as soon as this market starts to rotate lower, we get a small uptick in volume. That's a great indication that this market's just trying to rotate over just a little bit. And now I'm not looking to see this market rotate all the way back down, but I am definitely looking for a little bit of a sell-off. And that would be a good idea or a good signal if we start to recognize we're getting an uptick in volume as the market's starting to sell off. That might give us a chance to catch that short and be cheap and very tight with that short side move. So something to think about, something to start paying attention to. If you miss the big moves, start paying attention to the basics of volume, right? What are the basics of volume? If market is moving in a direction and volume is starting to slip or volume is starting to back off, the basic principles of volume state that that market is looking to either A, fall into just a little bit of a range or start to rotate over. We got that rotate over today. Market rotated nicely. And what do we have right here at 69.80? Weekly kickoff high. So going to be a pivotal spot here in the overnight session and then tomorrow morning. Make sure you're marking that on the charts next. Let's look at the S&P 500. Simple. Market opens up, pops right up to weekly swing high. I'm looking for opportunity there. I'm looking for it. And if you can find that entry point, that's a cheap entry. As this market pops up above, we're going to take that short. And where am I going to take that short to? I'm going to rotate it right down to settlement price. Settlement price in the S&P 500 here today was 45.21 quarter. 45.21 quarter, all the way down here. That's where I'm going to be looking. Now, it doesn't make it there. It does not give us that full chance. So I got to keep my eye on where am I going to look and say, you know what? I did not make it down there. Here's where I'm going to accept my profits. Well, I love unchecked point of control right here at 45.26, 45.26, 45.27 is unchecked point of control. So that's a really nice move if we can catch the short, rotating lower. That's a nice 15 point or 15 handle move in the S&P 500 per contract that you're trading. I'm very content to take that trade and shut it down for the day. And if you decide you're sitting in a little bit lower, we came in all the way down. And this is what I love to see. Market accepts inside value area from yesterday and rotates both sides. Both sides of value. Next, let's look at the Nasdaq. Now, Nasdaq, very fun one here today, right? Market opens up. Let's open up this a little bit for us here. Market opens up this morning. We get a slight pop. And where does it pop to? I was sitting on the phone with Michael Patak this morning, and I actually said to him right on the open, I said, the first thing I'm going to see, I want to see if this market can get to point of control from yesterday. And I'm going to look for an opportunity. Now, I'm not typically a short side trader, but I'm looking at opportunity here because this is a cheap entry. If I can get in at 682, yesterday's value area high is up at 87, 687. So I got a 5 points of risk in this trade to look for a rotation lower. Hell yeah, I'm taking that trade all day long. Market pops right to point of control. I get my trade, and where am I looking to run this thing to? Well, I got a couple eyes down below. I'm looking. First and foremost, we're going to watch settlement price. Settlement price in this market was 15,609. All right, that's a nice 70-point move there. But what do I have down below? Going back to Tuesday. Tuesday unchecked, regular trading hour, unchecked point of control. Right down here at 582. Market moves right down to it and through. This to me was the trade. Point of control to point of control. Inside rotation lower. We have set up really nicely here for this opportunity. We came even down to Tuesday's value area low. So huge directional move in this market. Now, if you missed the initial move, here's where your next chance was. Market was moved through and traded below yesterday's value area. Once you start to see the little bit of strength here, you've got to make that judgment call. You're going to pay attention to volume. You're going to pay attention to order flow. You're going to pay attention to price action. You've got to make that judgment call. Am I going to take the short at value area low to see if I can continue to see this go check, uncheck point of control down here? Or am I going to use value area low as my channel and I'm going to try and trade inside this? Well, here's what I've got to say to that. Market traded below, held below nicely, continued to trade below, and this was strictly a test up above. If I'm going long here, where's my stop going to be? Right? Am I going to put a stop near at overnight consolidation? Or you guys know me, I'm paying closer attention to overnight lows, which happens to be yesterday's swing low. So I'm seeing way too much risk in the long side, where the short side here, short side, we've got a little bit of a chance because I just need this thing to quickly reject value area. I need a quick rejection of value area, and we got that pretty quickly, and this market provided good opportunity and continued once again down to, you can call it Tuesday's value area low. To me, I'm not looking for that move. I'm looking to uncheck point of control down here. So some good opportunity in the Nasdaq. Next, let's go ahead and look at the gold market. So like we said, gold this morning opened up and we had a little bit of pop, but here's what I'm paying attention to. Notice where gold has continuously rejected over the last few days. This 1819 price. Continuous rejection here in gold. Market opened up. We rejected it last night. Rejection continued off the open and rotated lower. And where do we continuously see this market swing low? We got swing low right here at 1810. Swing low here, moved through heavily all the way down to 03. Another swing low here at 1810. And today we rotated right down from 1819 down to 1810. That's a $900 contract move. Good opportunity. And that's where I'm going to be continuing. This market is in a defined channel. So couple things to start looking at as you trade in these continued channels, right? Let's just bring it back a little bit. Define your channel. Give yourself some visual on that channel. We've got continuous point of control in this market right up here, right around 1817. So we're going to pay attention to that 1817 up to 1819, proving very pivotal. Good opportunity every time the market rotates higher. or rotates up to that range. So, Justin, I see your question there. Can you just clarify which product you're talking about? And I can give you, because every product's different based off of pit hours. Next, let's look at the euro. Euro opened up this morning and actually had a nice little push lower, right? Market opens up. Typically what we're looking for is directional move. Where does this push lower? So this market pushes lower right to overnight low, value area low of yesterday. Sets up for a cheap opportunity. A cheap opportunity here in this market. Maintaining trend. We've got trend overnight. We've got trend from yesterday. We're seeing some strong directional moves to the upside. So we're finding a little bit of weakness off the open, attracting buyers. A little bait here, bringing in a little bait for the buyers, brings the buyers higher in market trends all day long. If you miss the initial move here, we got to pull back a couple times throughout the day. And those are the things that you want to look for. When market gets directional like this, you're looking for those weak points. The points where part of you wants to say, or that rookie side of you as a trader wants to say, here's my chance for rotation. Here's my chance to call the top, call the bottom. Nope, that's not what we want to do. Trend is your friend. I know it's a cliche, but it works. Looking for those weak points and a directional move is where you're going to find good opportunity and probability states. All right, lastly, let's go ahead and take a look at our 10-year note, if that'll minimize. There we go. 10-year note here. Really quiet day. Opens up on yesterday's high, rotates lower. Does not make it to point of control. Doesn't make it to settlement price. Settlement price in this market was 133.14 half. 133.14 half is where our settlement price was, right here. Market does not make it down to it. Tough trade when this market is as tight as it was. Value area today is literally 5 ticks. It's really hard to trade that. I won't argue that when you're active in these markets. So when you're trading the 10-year note, keep your risk extremely tight. So, all right, guys. Those are our markets here today. I see your question, Justin. So that is my question. There aren't any pits anymore, as trading is 23.5. I can't seem to find pit hours on the CME website. Do you have a list of the pit hours? No, you just got to let me know what product you're looking at here. Crude oil, 8 a.m. to 3 p.m. 1300. Some equities market, 8:30 a.m. to 3 p.m. That's what I run on those. Gold market is a 720 market. I run the value area starting at 7 p.m. or 7 a.m. down to 1400. And the same will go for the euro and the 10-year note. Those are all running the same time. So you're not going to find a list of pit hours anywhere usually. Open interest hours, that's kind of things that you want to be looking for. So those are the hours we run on our charts here. That's where the volume comes in. And you can typically, for some of these markets, you can see it right in the volume. You can see volume spike at 8 a.m. in the crude oil. You can see volume spike at 8:30 a.m. In the equity market. So really, we use our value areas based off of when the high volume is coming in pit hours. So pit hours are still a pretty common thing for most traders out there to talk about those pit hours. Regular trading session, every market is going to be a little different. I don't know natural gas off the top of my head. Like I said, crude oil. Crude oil would be 8 a.m. down to 1300. Let's do this. I would not say they're whatever hour zone trading hours. I wouldn't say that. It's based off of when volume comes in. Volume still comes in off of the historic trading pit hours. There are still pits there. There are still pits. So when I don't say that there aren't, I still know a few guys still down on the floor trading in the pits. They are there. Just pay attention to volume. That's the biggest thing. I do believe natural gas is the same as crude oil. All right, I want to say hello to everyone. We'll take a glance what else is going on. Ednelson, good to see you. I'm guessing by that beautiful day to trade there, you had yourself a nice day. Glad to see that. Vince, good to see you. Ricardo, George, Dag. We're not leaping in. Don't leap in on the number. Charles, good to see you. Ames, good to see you. All right, glad to see you like the NQ. NQ sets up nicely. And based off of things that we talk about every day, right? Points of control, value areas, overnight highs and lows. I know it sounds simple, but that's the kind of trader I am. I like to keep it simple, stupid. I'm looking for continuous things that tend to have high probabilities for me. And I like to share that with you guys. It works for me to look at these levels continuously every day. And then we have to make that judgment call as the market approaches them, the markets around them. We make that call. Is this going to work for me or is it not? And if it does, great. And if it doesn't, hey, that's all right. There's going to be another opportunity. We can close these gaps to settlement price. Such a great trade. All the time, something I'm looking for. If the market is open up away from settlement price, I'm looking to see if that market's going to rotate back to it. I won't hesitate on those trades. Using these continuous levels present great opportunity. Vlad, good to see you as well. Awesome, guys. All right, so our Bitcoin today was up above 50,000. I think we gave up a little bit, 48,320 there. Stocks are moving. So let's see what our stocks are doing. Airbnb continuing to pay us $157.20 there. Feeling good about that one. AMC, $44.38. GameStop still holding strong above 200. Pretty volatile morning here today. Opens up at 215, breaks down to 206. And going to end our day right around 213.52. And lastly, we got two more. Tesla. Hey, still down day here today a little bit, but still holding strong above 700. That one is $732. And lastly, our Robinhood stock, a little bit of a down day here today, still trading nicely, $44.49. And hey, stock market's down. What does that mean with VIX? VIX pops. VIX opens up down at 15.8 today. Rallies up to 17, and we're going to end our day at 16.4. So some good opportunity there throughout the day. Like we touched on Ford and what's going on there. There are a lot of things going on in Congress right now, so just pay attention to that stuff. We'll leave it at that. Tomorrow, don't forget, unemployment number, 7:30 a.m. Central Time. I will be there trading that, or after that, I should say, not trading the number. I don't want anyone trading that number. Outright positions, you will get hurt in that more than you will make. So just sit on your hands a little bit, wait for that number to play out. Let's wait for that equity market to open up at 8:30, and then we look for some opportunity. And remember, it is Friday. Friday's our capital preservation day. Hold on to what you got. Don't risk thy wad, as Hogue likes to say. Be patient, and if you're down this week, don't come in trying to make back those losses. Just try to set yourself up for a little better situation come tomorrow. All right, lastly. And then Monday, do not forget, Monday is Labor Day. Off day, take the day, enjoy the long weekend. Don't think about trading. Go enjoy the weekend for yourselves. Have some fun. Get outside. Enjoy some weather. Or if you're someone who likes to stay inside and relax. Watch movies, clean, cook, play video games, whatever it is. Do something away from trading, something that you'll enjoy. All right, lastly, this date in history, and we'll get on out of here. This one's kind of cool. First ever ATM opened up in 1969. And we got one other one, a big one, on this day I lost it. Here we go. This day, 1945, Japan surrendered to the U.S., bringing an end to World War II. So on that note, guys, I'm going to go ahead and sign on out of here. I hope you all have a great weekend. Hogue will be back tomorrow morning, 8 a.m. Central Time with the market forecast. So don't miss out. Give him a good heckle. And again, thanks to Hogue for filling in for me the last couple of days here this week. Shouldn't have to worry about that too much more. So thank you. So on that note, get out there, stay safe, wash your hands, trade smart, and trade well. Look forward to seeing you guys in the markets. Take care, everybody.